Okay, so let's talk about everyone's favorite topic, which is mortgage rates. Now, in my previous video, I mentioned that when the Federal Reserve cut short-term rates, we saw a slight increase in mortgage rates, and it's still like that today. But there's an ideal being floated around right now by the FHFA director, Bill Pulte. So Bill Pulte pretty much oversees Fannie Mae and Freddie Mac. These are your conventional, conforming, traditional loans that a lot of lenders and banks adhere to. So he's floating an idea around right now about eliminating what we call LLPA. What is LLPA? This stands for loan level price adjustments. So unbeknownst to you, realtor, borrower, the average Joe out there, they're unaware that there's many different things that go into an interest rate. It's not a one size fits all. It's not, 30-year fixed rate, whatever it is that day. It doesn't mean that rate applies to everyone. There's basically these loan level price adjustments. And what these are risk-based adjustments that Fannie uses to determine your interest rates. Things that go into your LLPA, the loan level price adjustments, are things like credit score, your down payment, the type of property, the property use. So let me demonstrate this with showing you a chart real quick. So what you're looking at here is a loan level price adjustment chart that all lenders and banks use when they're pricing conventional loans with Fannie Mae or Freddie Mac. And if you can see here, when you have a loan that has a 780 credit score and someone is putting down 25% or more, there are literally no loan level price adjustments. But now let's go down here in the chart and look at someone that has a 640 score that's only putting down 15%. They'd fall in this column. It's a 2.5% hit to the price in that loan level price adjustment. So as you can imagine, there's a big difference for someone with a 780 score putting down 25% compared to someone with a 640 score only putting down 15%. And if you just quickly look here, I won't go through all of them, but they range all sorts of ranges here based on credit score and down payment. Now, these apply to every borrower across the industry. But what also applies when it comes to the type of property or the use of that property, whether it's a primary, second home, or investment. And these can get really large. If you look here for condos, for example, condos, when you're putting down at least 25% or more, very little price adjustment, 0.125. But when you're putting down less than 25%, you can see here, it's a 0.75. When we jump to something like an investment or second home, these are significant adjustments that can be added, anywhere from 1.125 if someone's putting down a really large down payment, all the way up to 4.125. So these loan level price adjustments are really key in determining your interest rate. And I just went over the second home and investment property ones. Those got beat up quite a bit shortly after COVID in 2022. They made large adjustments to those. And that's because people were just gobbling up properties. People were buying second homes and investment. And I think it was, Fannie and Freddie's way of saying, hey, we really want to cater to the primary residents. We don't want to make it this easy. So they put those large hits on there. And that's what made rates jump up on those properties especially. Now, there's been some controversy with some of the LLPAs. They did a complete overhaul in 2023, and they actually rewarded some first-time homebuyers and people with lower credit scores and actually made it slightly higher with people with better or higher credit scores. So a lot of people thought that was not fair. So look, the bottom line is Bill Pulte's floating this idea out there that they might eliminate the LLPAs, and that would be huge. Then it doesn't matter what the Fed does. We would see instant relief on mortgage rates, not all interest rates, but mortgage rates especially, by eliminating these. So listen, this would be great news for the mortgage industry. This would spur a lot of activity, allow buyers to get lower interest rates right off the bat. So we're going to be paying close attention to this, and we'll certainly update you as we hear more about it. So if you have any questions on this, feel free to reach out. Hope you have a great day. Take care.